am certain of one thing. I wouldn't bet against MicroStrategy. I wouldn't bet against Michael Saylor. And I'm glad that the equity exists in our ecosystem. We own a lot of it in our ETFs.
As Bitcoin gets closer to $100,000, it's about to reach a significant milestone. Matt Hougan explains why the timing is so important. Leading cryptocurrency specialist Hougan discusses how the integration of cryptocurrencies with traditional finance is turning Bitcoin from a speculative asset into a regulated, mainstream investment in a recent interview with Jen Sanasi. With firms like Coinbase and MicroStrategy playing important roles, institutional interest has increased and opened up new channels for conventional investors to get into the cryptocurrency market. As Hougan notes, shifting laws, notably in the US, are complicating matters for cryptocurrencies, especially altcoins. The future of digital assets may change as a result of these developments when big financial players react and international rules change. The stage is set for what might be one of the most revolutionary events in cryptocurrency history as Bitcoin approaches crucial price levels. To learn more from Hougan about the factors propelling Bitcoin's rise and what to anticipate next in this rapidly changing industry, watch snippets of the conversation.
Look at the chart since March. Bitcoin has been trading in a range between the all-time high around 73,000 and about $50,000. And it seems to bump its head against that all-time high repeatedly and can't get over it. And that makes some behavioral sense. I think there are a lot of investors out there who are willing to sell at the all-time high. They like the idea of getting out at peak prices. But eventually, we're going to exhaust the demand to sell at that all-time high. The Bitcoin ETFs are vacuuming up record assets. We're seeing rising retail demand. And one of the reasons I think it's an interesting time to think about getting off zero is once we exhaust that selling at the all-time high, where will Bitcoin stop? In other words, if we get above 73, if we get to 74, 75, who is selling? I think the next major stopping point for Bitcoin is $100,000. I think that's where we'll again bump into people who are willing to sell. But between the all-time high of 73 and change and $100,000, I see a little bit of an air gap. I think Bitcoin could rapidly make that space if we do get above these all-time highs. Yeah, I think crypto equities are in a really exciting space. You have the miners who are benefiting from the sort of dual jet packs of crypto and AI demand. You have Coinbase, which somehow maintains its near monopoly position in the retail space, an incredible business. You have MicroStrategy doing its thing. Look, there are a lot of investors out there who are still uncomfortable holding Bitcoin and Ethereum directly, and they're looking at these crypto equities as, an alternative way to get in. I think particularly if you look at Coinbase, that company is executing extraordinarily well, not just across its core business, but across what's going on in base and their view for the future. I think it's hard to look at a stock like that and not be excited about where it could go in 2025. Look, MicroStrategy is an incredible company. I think Saylor is an incredible leader, and he's executing a financial plan that makes a great deal of sense. I think it's challenging to think about the fair value of MicroStrategy. It's trading at a premium to its Bitcoin holdings. Could that premium expand as it takes on more leverage? Could it fall as people supplement other things? I'm not sure. I am certain of one thing. I wouldn't bet against MicroStrategy. I wouldn't bet against Michael Saylor. And I'm glad that the equity exists in our ecosystem. We own a lot of it in our ETFs, but it does have that volatility and a not one-for-one relationship with the price of Bitcoin. It may be 1 for 2, or it may be 1 for 0.8. And that's where the risk lies. But for investors looking to get levered exposure to this space, it's been working for a long time, and maybe that will continue to work in the future. So I do love the company. It's just definitely a unique. We say something like Bitcoin is becoming digital gold and the US is abusing the dollar, so Bitcoin is valuable. And what the CIO memo said is that's actually two arguments in one. So one bet you're making when you invest in Bitcoin is that Bitcoin will continue to mature and stand shoulder to shoulder with gold. And if it does that, if it matches gold from a size perspective, even at today's prices, you're talking about $900,000 Bitcoin. The other bet you're making is that the US will abuse the dollar. It will pile on debt. That will happen in governments around the world. And the size of the store of value market, the size of the inflation hedging market will grow. The reality as an investor is you only need one of those to be true. The US could not abuse the dollar. Bitcoin could just continue on its journey from sort of idiosyncratic retail asset to mainstream institutional asset. And you could be looking at a 10x in your position. Or the government could abuse the dollar, continue to pile up debt, and the size of the store of value market could grow. And you could see a Bitcoin position double or triple or more. The beauty of it is those two compound. If we see both of those, as I said in my CIO memo, we're talking eventually about seven-figure Bitcoin. And that's my sort of core response. So the answer to the question was no, the US doesn't need to abuse the dollar. The dollar doesn't have to fail for Bitcoin to get to $200,000. All we need is for the trends we've seen over the last 10 years to continue for another year or two. And I have a high degree of confidence that will happen. I think if you get beyond Bitcoin and Ethereum, which have already made it through the regulatory window, they're already ETFs, they're already being used by mainstream institutions. You start to get into a territory where there is more legitimate regulatory risk from Solana on down. There's less clarity on how they will be regulated, whether they are securities in the view of the SEC or the CFTC, and who wins makes a big difference for that market. In a Trump presidency, we know he's said he'll fire Gary Gensler on day one. We can expect a new SEC regime relatively quickly, which means I think we'll see a strong altcoin rally. In a Harris victory, look, I think we're going to get to this new regulatory regime eventually. Harris had made some very positive comments about crypto. That's the trend where Washington is moving anyway, but it's going to take longer. We won't have that immediate turnover, that immediate flipping the page. There will be more uncertainty, and markets dislike uncertainty. So I think those altcoins could face a short-term struggle in that event. I would say that might be a buying opportunity if your window is a few years out, because I do think Washington has broadly flipped and turned to a neutral or pro-crypto view. But I think the market may interpret a Harris victory as a loss for altcoins. It could give sort of a pullback that if you have a multi-year horizon, could be an interesting moment for you.